So one day after racing, right, the Dow to 26,000 only to give it all back, the market took a more pedestrian, yet obviously very determined route today. And so each move higher lured more money off the sideline. Consequently, the Dow closed at the high of the session. I mean, if the market closed at 5, we'd have kept going up. NASDAQ and S&P also finishing at new all-time high points. All S&P sectors were higher, and there were a lot of themes that played out today. For instance, with the industrials, led by Boeing, which is just absolutely amazing, a juggernaut building on last year's leadership move. Then there's consumer discretionary stocks. They were led by another 2017 winner, the casino company Wynn, and like Boeing, getting a whole lot of cash from Asia. Housing stocks enjoyed another strong session as well. The prospective buyer traffic came in at the second highest level since July of 2005. In addition, citing the new tax laws, UBS lifted their share price targets on several of the home builders, including Lennar. They say it goes to 99 before they said 77, and D.R. Horton 58 from 53. And it was really great news even before the open from Dutch chip maker ASML, and it put all the semiconductors on fire. They all surged, and consequently so did the technology sector. And then there was merger scuttlebutt that sent shares of Juno Therapeutics higher, and now it has investors looking for the next target in biotech. Obviously, that all helped the healthcare sector. And then there's the biggest corporate news of them all, from Apple. Announced that it will plow billions of dollars into the U.S. economy, $350 billion, in fact, over 5 years, $245 billion coming back from overseas, 20,000 jobs, $5 billion innovation fund, $2,500 for stocks for certain employees. And this news came on the same day that Bank of America says that Apple will reach a new market cap of $1.1 trillion. In fact, more analysts are now saying look for Apple to be the single biggest contributor to Dow 27,000. Meanwhile, investors continue to contemplate then what could actually trip this rally up, and some think it's possibly a government shutdown. But I got to tell you, if history's a guide, investors should be rooting for a shutdown. The last 3 shutdowns in the S&P saw gains of 37, 23, and 32%. And the GDP in 13 years of shutdown only declined once. Here to discuss it all, Danielle DiMartino Booth, former Dallas Fed advisor and the president of Money Strong LLC. Hey, Danielle, I got to tell you, this market's on fire. The economy's on fire. And one of the things that stuck out to me was this repatriation of money. Apple bringing back $250 billion. How does that change the equation, if anything?
Well, to me at least, the other companies in this space, nobody's got as much cash overseas as Apple. Let's be clear about that. But what Apple has done is set the precedent. So now all of the others in the space, followed potentially by the pharmaceuticals, not just technology companies, Charles, the others in the space will have to follow the leader. And Apple's not just saying we're bringing the money home. They're saying we're bringing the money home and we're going to create jobs. Remember, the last time we had a big repatriation, a big onshoring of profits, we didn't have a Twitter world. We didn't have the social media ramifications and backlashes against corporate America that you could see today.
Right.
So the optics of what Apple has done are fantastic. I mean, Charles, let's put in perspective what the Standard & Poor's 500 has created since the first of the year. Over $1 trillion has been gained since Election Day, $5.5 trillion. Charles, these are big, big numbers.
These are big numbers. And, you know, it's interesting because you mentioned the last time we had repatriation. It was also the last time that our GDP grew at more than 3%. And I'm wondering, has our economy become something of a victim of the law of diminishing returns? Because think about this. The last time we had GDP above 5% was 1984. The last time GDP was above 4% was 2000. The last time GDP was above 3% was 2005. Can we get this economy really moving again at all?
You know, it's a really good question, Charles, and I don't have a really good answer. What I can say is that if you looked at the Fed's beige book that was released today, you saw some of the greatest gains in manufacturing, construction, trade, transportation, and the Dallas district, by the way. So what you're seeing right now is an economy on a huge sugar high as it rebuilds from the tremendous natural disasters that we experienced in 2017. And the question is, what happens in the second half of the year? Are these repatriated dollars that are going to be coming onshore going to do a lot to help propel the market beyond just the rebuilding effort from these natural disasters? It's an unknown at this point, but I sure do hope that the answer is yes.
And, of course, everyone's going to be watching your Fed to see if they don't mess this whole thing up. Danielle DiMartino Booth, thank you very much.